Everyone's talking about the new PDT rules, but most people are getting it completely wrong. They're either panicking or celebrating like this is some huge win for small accounts. The truth is way more complicated. I've been digging into what this means for new traders, and I found a huge problem. More importantly, I'm going to show you the solution to this problem, something 99% of traders never even think about. But first, if you're unfamiliar with what the PDT rule even is, this should help you understand.
In 2001, the Financial Industry Regulatory Authority, or FINRA, created the Pattern Day Trader, or PDT rule. Under the PDT rule, any margin account that executes 4 or more day trades in a 5 market day period is flagged as a pattern day trader. Getting flagged isn't necessarily bad. It just puts the account under a little more scrutiny. Once your account is flagged as a pattern day trading account, you're required to maintain a minimum of $25,000 of equity in that account in order to day trade securities. Flagged accounts below this equity level can face restrictions, so it's important to understand what counts as a day trade and what happens to your account once you're classified as a pattern day trader. So, what counts as a day trade? The key to determining what counts as a day trade is matching buy and sell orders. For example, let's assume your account has no trades at the beginning of the day. Then you buy to open 100 shares. Later, you add another 100 shares. And then you buy 100 more shares, for a total of 300 shares. Later that day, you enter an order to sell to close those 300 shares. Despite there being 3 buy orders, there's only 1 exit order. This means there's only 1 pair of matching entry and exit orders, so it's only 1 day trade. An account that's flagged as a pattern day trading account and has less than $25,000 in equity will receive a day trade minimum equity call or equity maintenance call. You aren't required to immediately meet this call with funding, but if you place any more day trades while under the call, your account will be restricted to closing transactions only. Remember that the $25,000 equity balance is the key. If you don't meet that requirement, you won't be allowed to day trade consistently.
Okay, so here's what's happening. They want to drop that $25,000 minimum down to just $2,000. The SEC is thinking about dropping the PDT minimum from $25,000 down to around $2,000. Sounds great, right? Way more people can day trade now. Here's where everyone's wrong. This isn't about making day trading easier. It's about opening floodgates to inexperienced traders who have no idea what they're doing. And when that happens, they lose money fast. Think about it. Right now, you need $25,000 to day trade. That's a high bar. You either saved serious money or built up your account over time. Either way, you learned lessons about risk management. But when that drops to $2,000, now we're talking college students with part-time job money. People who think they can turn their first paycheck into millions overnight. People who watch TikTok trading videos and think they've got it figured out. These new traders are going to get destroyed. Not because day trading is impossible, but because they'll approach it completely wrong. They'll treat real money accounts like video games, make emotional decisions, and chase momentum without understanding what drives it. The pattern day trader rule exists for a reason. Day trading is legitimately risky, and if you had $25,000 to risk, you probably understood those risks. Let me break down why small account day trading is brutal. Say you've got $2,000 and want to make $100 a day. That's 5% return every single day. Even the best hedge funds don't come close to that performance over time. It gets worse. Day trading profits get taxed as ordinary income. If you're in a 25% tax bracket, you need to make $133 just to keep $100 after taxes. Now you need 6.7% every day, and we haven't talked commissions. Even with commission-free trading, you're paying bid-ask spreads. Those few cents per share add up fast with small accounts. This is why the PDT rule protects people. It forces you to save enough money to handle day trading volatility, or pushes you towards swing trading and investing, way more realistic for small accounts. Here's what everyone's missing. Successful trading isn't about having access to day trading. It's about understanding markets, developing good habits, and building skills over time. The PDT rule change doesn't change any of that. The strategy that actually works revolves around one platform most new traders ignore: TradingView. Not just looking at charts. Using TradingView as a complete training ground for developing real trading skills. This is where 95% of day traders fail. Waking up, opening their broker, and chasing movers like it's a casino. Real traders spend an hour every morning on TradingView, scanning overnight news and futures, diving into the market overview to see sector strength, using the stock screener to pinpoint 3% plus pre-market movers and the story behind them, then analyzing those charts to map out support, resistance, and exact entry-exit levels. Next, they paper trade their setups with virtual dollars to build discipline, test their edge with the backtesting engine on years of data, and refine their playbook without risking a cent. Hit the link in my pinned comment to get TradingView free for 30 days and start trading like a pro before the market even opens. The PDT rule change is coming, flooding markets with inexperienced traders. Most will lose money because they're approaching day trading wrong. You won't be one of them. Spend the next months building real skills on TradingView. Learn proper analysis, develop systematic approaches, and practice through paper trading. By the time you risk real money, you'll have skills most traders never took the time to develop. You'll understand market structure and risk management with tested strategies that work. Trading takes time to develop. There's no shortcut to consistent profitability. But if you put in the work up front, the PDT rule change could be the best thing for your trading career. Good luck, and watch this video next.